Today, crypto prices spend another day in the red. A new platform aims to let political candidates fundraise with cryptocurrencies. And as another crypto company struggles to stay afloat, how big of a risk is the crypto winter to the broader economy? Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto prices are in the red again today, with Bitcoin trading at around $20,000, Ethereum trading at around $1,100, and Polygon trading at around 39 cents. Crypto initially rallied yesterday after the U.S. Federal Reserve chose to raise interest rates by 0.75%, but that rally was short-lived. Investor sentiment is still shaken by the collapse of Terra and the uncertainty of crypto lending platform Celsius. More on Celsius in a moment, but let's talk about a couple of other top stories first. A new crypto platform is launching next month to let political candidates raise money in crypto. The platform is called Engage Raise, and it will let candidates fundraise and hold events for crypto donations. It's all part of the growing involvement of crypto in politics. Crypto executives have already donated more than $30 million to U.S. candidates since the 2020 election cycle. And just recently, Bitcoin investor Eric Finman donated $20 million to GOP candidates running in this year's elections. Next, we've talked about crypto exchanges cutting jobs during the crypto winter, but Kraken is doubling down on its hiring efforts, though prospective employees have to agree with the company's new policy on culture. According to the New York Times, Kraken CEO Jesse Powell circulated a document in the company titled Kraken Culture Explained. Now, in it, the company told employees to refrain from calling comments toxic, hateful, racist, and more. The report also details online conversations between Powell and employees, where Powell questioned preferred pronouns, who was allowed to use racial epithets, and differences in intelligence between men and women. For employees who disagreed with the company's culture, Kraken offered 4 months' pay as they looked for another job. In response to criticism from some employees, Powell tweeted that the company welcomes all. Finally, let's talk a little bit more about Celsius. Research firm Kaiko says the crypto lending firm is running out of ways to stay solvent. The firm said that poor risk management, bearish market conditions, and an Ethereum derivative created the perfect storm. That derivative is known as STETH, or staked Ethereum. It's been selling at a discount, and that spells trouble for the platform. Kaiko sees few options for stabilizing the business. Celsius may have to sell a significant amount of STETH as collateral, and even if the business does stabilize, public opinion of the company may be permanently damaged. So, as the losses mount in crypto this week and more businesses struggle with staying afloat, how much of a risk is this crypto winter to the broader economy? I spoke to economist Joshua Gans at the University of Toronto to find out.
We saw yet another sell-off in the crypto market this week. Some are now asking the question, could there be a contagion effect from crypto to the broader U.S. economy? Obviously, that's a very big question. So let's parse it out, starting with the big banks. How exposed are they really to crypto at this point?
I doubt they're very exposed. There's certainly been banks and other financial institutions who've expressed interest in crypto as an asset and as an asset that they might like their customers to also be able to invest in. But in reality, there isn't that much of that investment going on. Banks have their own set of regulations and their own need to make sure that things are appropriate investments. So I don't think we've seen the sort of exposure to that than we've seen in other financial crises.
Can you explain why crypto being tied to debt is so key when we talk about its broader impact beyond the industry itself?
Yes, for some of the more traditional asset classes, you can hold those assets and their value is expected to stay moderately stable over some period of time. That means if you just by owning those assets, you can put them up as collateral to borrow money using them as collateral. What you haven't seen with crypto assets, simply because of their volatility, is that same process by which you're able to use it to buy other real world assets or more traditional financial assets and borrow off that basis. Now, of course, people have used cryptocurrency to borrow for other cryptocurrency, but that's sort of contained in the crypto world.
Now let's move on to the impact for the retail trader. There are some concerns that the money we've seen wiped out this week will translate to less spending in general, which could then hurt the economy. Is that kind of concern totally overblown, or is there something to it?
I don't think there's a huge amount there. Because the crypto world is said to be a $3 trillion asset class, was, and now it's less than $1 trillion asset class. Of course, it was never really $3 trillion because, of course, you couldn't borrow to finance spending on it and things like that. So that was never quite the same impact. But really, it's not. That's a very small drop in the ocean of all of the assets. Once you bundle up stocks, bonds, houses, those sorts of things. This is really nothing in terms of that. In fact, the bigger impact is the broader impact currently of the stock market, which is also depreciating in value.
So you said that right now, essentially all we're seeing are paper losses. Can you explain what you mean by that?
Well, if you had a cryptocurrency that was worth several $1 billion, one of the lesser known ones, and all of a sudden it dropped to, a fraction of that, a small fraction. It was never the case that all of the people could have suddenly sold all their cryptocurrency holdings and got those several $1 billion. It was simply the act of selling would have caused the depreciation itself. So we have to make a very big distinction in these sorts of nascent markets between the total amount of value at the current price, pretending as if everybody could sell, and what would really happen if everybody sold. And those are very different things. And in the crypto world, that means that, I know we call them paper value, which is kind of ironic in this now, but it really is paper value. There's not much you can do with it. If you are an individual holder and you sold at the top of the market, then you've definitely got money in your pocket. But not everybody could have done that.
Are there any parallels to be drawn between what we're seeing happen now and the housing market and subprime mortgage crisis of 07, 08? Obviously, we're talking about an asset class that's, as you said, worth less than $1 trillion versus the U.S. housing market that's around $43.4 trillion. So there's a big difference there. But are there any parallels we should be looking out for?
I think there are some parallels. I mean, certainly the lack of transparency, some of the misunderstanding and mispricing of risk that probably is at the heart of some of these transactions and beliefs is a commonality, that all financial crises of some kind share. But in this situation, the crypto world has been sort of hived off from the rest of the economy, much as a casino might be. Yeah, sure, some people might lose some money, but it won't be in such a big aggregate manner that would cause repercussions throughout the real economy. Suddenly people curtailing spending on building and other things. That said, right at the moment, that's happening anyway. It's just not crypto that's causing it. Crypto seems to be part of the show there. Interest rates are going up, which means that people move out of those riskier assets into the less risky assets because they've got a higher rate of return. That applies to stocks, it applies to cryptocurrencies, and I think we're seeing some of the same things.
Now, what happens if crypto becomes more of a thing, whether that's one of the aspirational goals of the industry is for Bitcoin or another major cryptocurrency to become the world's reserve currency. But even if we see adoption hit the kinds of levels, and some people say that it will, how big a risk to the economy is it then? I mean, there are no guardrails, really, no central entity that can print cash to shore up the economy. So what are we looking at in that scenario?
Yes, there is a sense in which the aspirations of cryptocurrency enthusiasts are to get to the stage of importance, whether they could cause a global financial crisis. And of course, we could never rule that out. But one of the processes of getting to that point is getting the sort of stability, the regulations housed around it, the understanding of what the market really is, so that it won't be that same sort of catalyst for risk. So in other words, we shouldn't equate a world where cryptocurrency is important and has the same amount of inherent instability as something that's a likely scenario. If it turns out to be important, it is because cryptocurrency has become more stable and acceptable and also, in some sense, de-risked from exactly what we're seeing right now.
Okay, that's all for Crypto World today, but we will be back again tomorrow, and we will see you then.